We know where we've been and we know where we are. The question is, where is the economy headed? Is the stock market going to rise or is it going to fall? Are interest rates going up or are they coming down? Hi, my name is Kareem Zakir and welcome to my quarterly capsule. Before I begin, I'd like to mention two new members who have joined my team. Joseph-Antoine Migdeliani, a licensed accredited financial planner, and Lillian Maluli, who has extensive banking experience and will be working with the day-to-day transactional administration, in addition to assisting Kendra Hutchin with her activities. Don't be surprised if you hear from either one of them. Unfortunately, Marie-Claude Descaries has decided to leave the firm in pursuit of her own dreams. We wish her the best of luck. Let's begin. Economic growth has been quite strong in the last year, and the simple reason is that the purchase of goods, not services, but goods, has been quite positive. Actually, growth has been pulled forward from future years. People who wanted to extend their homes, build patios, extend their decks, put in a swimming pool, have decided to do it all at the same time. The downside of that is that the growth is going to slow down going forward a few years. And it's also come at the cost of services. Instead of going out to a restaurant, well, guess what? The money's going towards renovations. Instead of taking a trip, the money's going towards goods being used in the home. So basically, the goods growth has come at the cost of the services growth. Unfortunately, I see economic growth in the future slowing down as a result of this phenomenon. There's been a profound change in our economy. I think this change will probably continue on for quite a while. But what's not changed is going to a restaurant. People are going back out to restaurants again. I mean, I went out to a restaurant just last week for my wife's birthday, and I can't tell you, it felt so good to be out with my kids and my wife, enjoying a meal being served, not having to cook, not having to clean the dishes. We've missed that. So that's going to come back. People are dying to go back out to a restaurant. People are dying to go on a trip. I mean, there's a lot of pent-up demand for that. However, you know, we put off the haircut for 18 months. We're not going to go back and get 5 haircuts in a month to make up for the 18 months. We're going to continue from where we left off. When we're going to go fly somewhere, we're going to buy one plane ticket and we're going to fly to wherever we want to go. We're just going to continue from where we left off. We're not going to buy 5 plane tickets for that next year. So the services side is not going to pull the economy forward as much as the goods side has. So to put it in simple terms, I don't see economic growth continuing as it has in the last year. It's funny because this is not a normal economic rebound. It's going to shift from the goods side to the services side in the near future. And unfortunately, the services side will not be enough to carry the whole economy at the same speed. So the next question is, will the stock market rise or will it fall going forward? The market is definitely hitting record highs right now. We are due for a correction of some sort. It probably won't be a large one, but we will possibly have a 5 to 10% correction. This is actually quite healthy and I welcome it because it'll remove the froth from the market. It'll get rid of the speculators and the real investors will step up and start picking and choosing good companies for their portfolios. But with the economy possibly slowing down, well, where to invest? That's the big question. Well, you got to be invested in certain areas that are going to benefit no matter what. And one area that I like a lot is the utilities area. The utility sector will benefit tremendously. Why? Well, for the simple reason is that the infrastructure is a little dated. It has to be renewed. And the need for consumption, in particular electricity, is only going to go up. Just think about all those electric vehicles that are going on the road. Every year, more and more electric cars are going on the road. So we're shifting from gasoline to electricity. Well, these utilities have to restructure, have to do a lot of investing in order to bring the grid up to accommodate society. Another area I think that is very promising, no matter the economy, is the telcos. I mean, more and more cars are connected to your phone. 5G is a very big factor in this. So telcos is another area that I feel is quite promising. Other sectors who are going to continue to benefit is the healthcare sector with our aging society. The demographics, they're aging. They require more healthcare services or medication. Another sector that I feel is fundamental, it's actually paramount, is the technology sector, the IT sector. I mean, if you think about the digitization of the world economy, more people are using technology than ever before. And I believe the technology advancements, the evolution of technology has been pulled forward at least 5 years. Another sector that I feel is going to do extremely well is the recreational industry. The hotels, the airlines, the restaurants, Universal Studios, Disney, all these types of businesses should do very well going forward in the next year or two. However, even though we can benefit from investing in those sectors that I've just mentioned, we are experiencing a short-term phenomena called inflation. And so the price of a lot of these goods have gone up quite a bit in the last year, but it's gone up not because of the demand, it's gone up because of supply constraints. And this phenomena, I believe, is going to be short-term. I believe it's transitory. It's not going to continue going forward. As people start spending on services and the economy begins to open up and everybody starts to go back to work, I would expect that inflation would normalize. This brings me to interest rates, because inflation is directly linked to interest rates. So if there's a lot of inflation, interest rates have a tendency to rise in order to slow down the price increases. So either interest rates are going to stagnate at these levels or they're possibly going to drop down somewhat going forward. I've alluded to this subject in one of my previous videos, that the governments around the world are indebted up to here. And so raising interest rates is going to hurt a lot of countries. They just can't absorb it. They can't afford it. In addition to that, demographically speaking, as people are aging, well, they tend to live off their money instead of investing into projects that stimulate economic growth. So this brings me to the last topic, which is going back to the offices. So it looks like after Labor Day, we should be going back at approximate 25%. It'll be like a hybrid model. After that, we'll see how things transpire. In any case, you can always contact me or any member of my team. We can have the meetings virtually. But if you're somebody who wants to meet me face to face, I'd be more than happy to do it. I want to wish you a wonderful summer, and I'll speak to you in the fall. Bye.